Hi, my name is Alex Carlich with the Gustan Show Associates. A lot of you people, might get denied on a computer. It's called a refer eligible. And refer eligible means that you're eligible on an FHA loan for a manual underwrite. So approve eligible means that if we just verify all the inputs that we inputted into the computer, your income, your assets, your job history, as long as we verify it, then we don't need anything special extra than that. So we just follow what we just verify what we put in there, and then as we go through the process with the underwriter, as long as nothing changes, you're good to go. But if you get a refer eligible, it requires some analysis. And refer eligible means you're downgraded to a manual underwrite, and you have three options. You can do three sets of ratios: 31-43, 37/47, and 40/50. So when I'm saying those numbers, I mean the ratios of your mortgage payment to your gross monthly income and your mortgage payment plus the debt to your gross monthly income. So 31/43 would be 31% of your mortgage payment can be 31% of your gross income, and then the 43% would be that's what you can use for your debts, monthly debts, and your mortgage payment. So the 31/43 requires only 1 month reserves in the bank account after you close. So let's say after you close, you've spent all your down payment money, closing costs, all that, and you still have one month's mortgage payment. That's one of the reasons for a manual underwriter would approve you. So automated, you don't have to have these special extra 1 months or anything like that. Now, FHA manual underwrite for 37/47 now requires a special, more special thing. It requires one of the following. You have to have at least one of the following. And these are the four things that a manual underwriter needs to see for a 37/47. You have to have either 3 months bank state or 3 months reserves in your bank account, so that's your money, no gifts. You have to have residual income pass, which is a complicated math test. We can put you through it. A lot of people pass that residual income test, a lot of people don't, so it's a 50-50 shot on that. Number three, you can't have payment shock. Payment shock is your current rent's $1,000 a month. You can't go over 5% of that, so your new mortgage payment cannot be more than $1,050. Otherwise, it's considered payment shock. So if you don't have payment shock, then that's a compensating factor. And then the fourth one is additional income that we're not using towards underwriting. So for example, if you have overtime you've been receiving for a year, we can't use that as your gross income, but we can use it as a compensating factor. You have additional income that we're not using in your debt ratio because of the rules of overtime. Overtime requires 2-year average over the last 2 years. So if you've been receiving it for 1 year, we can't use it as your main income, but it's a compensating factor. So if you go 40/50 manual underwrite, then you have to have 2 of those 4 things. So 3 months reserves and no payment shock, for your example. So a manual underwriter has to go through those steps to manual underwrite you versus the approve eligible, which is everything is good to go as it was submitted. And another thing a manual underwriter has to look at is you can't have any mortgage lates in the last 12. You can't have any installment lates in the last 12. You can't have anything with 2 mortgage payments or 60 days late, or 2 installment loans 60 days late, or any combination of those 2. No 2 times 60 on installment or mortgage in the last 24. And then you can't have anything more than a 1 times 90 on a revolving credit card in the last 24. So it's complicated, but that's the difference between manual and approve eligible. Approve eligible, you can have all those lates in the last 24, and if it still gets approved, you're approved. Manual, you can't have all those lates on the mortgage or installment. So if you get downgraded to a refer, you have to fit this guidelines. You have to have 1 of those compensating factors, maybe 2 of the compensating factors, maybe just 1 month reserves, and you can't have those certain lates. So we want to get the approve eligible, but if you get a refer, you're not dead in the water. Please like this video and share it, and if you have any questions, leave it below and we'll get back to you. Thanks.